What's going on, guys? Welcome to Stock Talk with Nico Criticos. Today, I want to give you an update about my portfolio, along with what stocks look like attractive buys at the moment and what stocks that I'm considering selling. So, today and yesterday has been great days in the market. A lot of these stocks are shooting up today. Meta has been a great performer. Amazon has been a great performer. Airbnb, I'm right around break even. Uh, I think that one's got some ways to go, though. I think I can see Airbnb being $140, $150 stock. The QQQ, I've been selling off a little bit just because of how much of a run we've had. I think we're up, we're up over 30% just so far this year. So I'm taking a little bit of profits there. And then when the NASDAQ falls down, probably back down to 320, 330, then I'll buy a bigger position in that. Intuit is an interesting one. I sold out of Intuit for a small profit a couple weeks ago, or about a week ago, when I heard that the government was coming out with free tax filing software. And then I saw some more research that showed how there's already been free software to do that for the last couple of years. I think the other thing is Intuit owns those, even though TurboTax, I think, is their biggest money-making business, they own different businesses. They own 5 pretty powerful brands, and then if something were to happen to one of their companies, they could buy another company out. And I think Intuit's they're in a place where, as far as the finance industry goes, I can see them continuing to innovate. Maybe they integrate artificial intelligence into something. Maybe they buy out another company, something like that. If there was a extreme risk to the TurboTax business, which it's not even 100% sure that's going to be a substantial risk to TurboTax. That we don't know that yet. Adobe has, I think I'm up 27%, no, 25%, something like that on Adobe. So Adobe's looking really good lately. I love that one. Disney has not been looking good, which I understand there's a lot of uncertainty and stuff, but I'm still a believer in Disney. I think they own too many things. They're now going to have Hulu, Disney Plus, and ESPN. So, I mean, I feel okay with Disney. I understand they're going to have some cash flow problems probably in the near term, but I'm not too worried about that one. Ulta I just started buying this yesterday because the stock started falling. So Ulta, I love Ulta. If Ulta goes down to like 400 or below 400, I'm going to buy more shares. Right now, I started my position at like $440 a share, but that one is it's a pretty small position. So that one I'm just going to keep an eye on, and I'll buy more if it falls. UPS, I built up my position in this one, and I love UPS. I don't think the stock has pretty much been at this price from 3 years ago. It was trading at this price. So that one I feel like this is a good time to get in. Then I'm still holding on to my USB. I started buying into United Health, which is a very small position at the moment. But if that one falls more, then I'll buy more. Pool Corp is right in the middle. Not really too big of a position yet because it hasn't fallen that much. And then these I just bought today just to keep an eye on. I wouldn't really count this as a position yet, but I bought 1 share of Nike, 1 share of Starbucks, just because they're down a little bit from where they've been trading recently. So if these fall, let's say another 10% maybe, then I would be interested in building out a more substantial position. The other stocks that I saw today, one was Intel. I mean, I've been saying for a while now, at least 6 months, that Intel is not a good price, not a good value, because they're doing 30 cents of EPS this year and $1.60 or something next year in EPS. So I understand they're investing in stuff and maybe they have a promising future ahead of them, but they're trading at way too high of a PE ratio right now, even based off of the numbers they're going to do in 2 years from now. The PE ratio still looks high. So I think this should be a $20 stock, maybe a $25 stock, if you want to be optimistic about the future. Now, the other company that's interesting today is Target. I bought a little bit more of this. I like Target. I think they're a pretty safe company to invest in. The reason today the stock is falling is, I guess, because since Target is pushing that liberal agenda, you could say, with the LGBT and all that stuff, this conservative hedge fund sold off a bunch of shares and said we're not investing into this company. So I mean, it is what it is, but I mean, yes, that's going to hurt the stock price, but is that going to hurt Target's financials? No. That's why I'm not too worried about Target moving forward. So those are the stocks I have my eye on, and that's what I'm buying this week.